Good afternoon, ladies and gentlemen. My name is Chris, and I'm co-founder of BVNK. And today I'm going to be speaking to you about crypto-powered payments. But first, a little bit about who we are as BVNK. We're a payments company at heart, and we're building crypto-powered payments products. We have a cross-border payment solution. We also have a crypto payment gateway that allows traditional merchants to accept crypto payments. And then we bring the whole platform together with our BVNK business account. So it's always been our core thesis at BVNK that traditional financial services and crypto financial services are converging. The fintechs of the last 10 years have done a wonderful job upgrading or adding a new UI layer on old legacy infrastructure, particularly in the payment space. But we really feel that blockchain technology provides an actual core infrastructure upgrade to the old legacy infrastructure, and that's where we really see innovations at the forefront within this payment space. I always like to use this slide to really show how disruptive technologies are adopted at an increasing and accelerating space. This specifically shows all the large cap tech stocks and how long it took them to accrue value and reach $1 trillion market cap. On average, they've taken about 33 years, and Bitcoin took 12. So you can see that accelerating value creation coming through. There's another great technology adoption curve that I like to look at. This has basically plotted the internet users tracked to 1 billion. And if we plot that same growth trend and add it to the adoption of crypto users, you can see that by around 2024, we should hit 1 billion users in crypto. Current estimates put us at about 220 to 250 million end users. So if we are talking about adoption, and despite the depressed prices at the moment, we're still seeing adoption and interest grow across most industries. You can see a slide showing that 81% of all, of top 100 public companies are using blockchain in some way, shape, or form. If you zoom in a little bit on the payment space, we've had a few recent announcements where PayPal are adding a send-receive feature to their buy, hold, and sell product. But also more recently, MasterCard looking to help very highly regulated traditional financial institutions access crypto trading services for their end customers. So, I'm going to take you through a couple of slides here looking at the end user adoption of crypto, or some of the slides that we're looking at, because at the end of the day, end user adoption will then drive payments adoption. So this is quite an interesting slide showing the number of active addresses on the Ethereum and blockchain network through time. We can obviously see the 2017 retail bull run put together that the initial curve, and the 2021 bull run saw new all-time highs. And what this chart is particularly showing is, again, looking at the Bitcoin and ETH network, but these have now become proven systems for transferring value. They're moving billions of dollars daily, and this really shows to me that there's early signs of blockchains being able to support a global digital economy. I like this chart as well. It shows kind of another version of Bitcoin adoption. This is Bitcoin's annual transfer volume. As you can see, it's already reached about 14 trillion just year to date in 2022. So it's just showing the size of the crypto economies are significantly larger than they were 5 years ago. So all this talk about adoption, what does that really mean for Bitcoin as a payment rail? So I think there's 5 things we really need to look at here, or 5 things we need to touch on, or 4 things. One being, the speculative nature and volatility of Bitcoin does not really lend itself well to mainstream adoption within payments. We've also got the digital gold narrative that has come to fore in the last few years, and that's really stopping end users from wanting to spend their Bitcoin. The core kind of piece is transaction speed. So naturally, Bitcoin's transactions per second is probably not suitable for a scaled payments network. You can see that MasterCard does something around 24,000 transactions per second, whereas Bitcoin's in the region of 7 to 10. So we also have people working on the Lightning Network, and this is specifically looking to solve the transaction per second, but it doesn't really solve the kind of volatility aspect of Bitcoin to be used as a payment method. So again, this is kind of just another chart showing Bitcoin's transaction per second, and it's not really going to give us what we need to do, what we need for an upgraded payment rail. And although the Lightning Network is gathering momentum, we're just not there yet. And they're more kind of focusing on Satoshi's original vision of Bitcoin, which was peer-to-peer electronic cash. And so despite some early successes in El Salvador with the Chivo wallet, the Lightning Network still has some way to go. So what does that mean then? If Bitcoin is not really fit for purpose as a scaled payment rail, we really find that Ethereum is kind of leading the way, specifically on transaction count, but also on active wallet addresses on a monthly basis. So this shows adoption there as well. And I think the innovations around what's being built on top of Ethereum, which is really DeFi, NFTs, but particularly stablecoins, is really proliferating an explosion of payments innovation that we're seeing today. I love taking a look at these charts as well. This is the massive growth in stablecoin issuance over the last couple of years, and you can see that J-curve growing. So the chart on the right is total stablecoin issuance, and as you can see from 2 years ago, it was under 10 billion, and we're now sitting with about 150 billion of stablecoins in issuance. And the chart on the left is fiat-backed stablecoins, which is specifically still about 90% of the total stablecoin market, despite a couple of experiments with algo stablecoins. And one kind of unique data point is USDC has already settled 3.8 trillion of transactions to date, which I think is always pretty impressive. This is another stablecoin adoption chart that is very apt. So when we started our original cross-border payments business in early 2020, stablecoins as a percent of total crypto market cap was about 3%. So naturally, liquidity and adoption and issuance wasn't there yet. But as you can see, we're almost at 17% today. And it's just showing the increasing importance of stablecoin infrastructure in the Ethereum blockchain to the payments use case. And you could arguably say that stablecoins are really one of crypto's killer apps. But if we're focusing on stablecoins, what does really that mean as stablecoins as a payment method? Well, we have kind of 4 things we need to zoom in on here. One is that they are stable, first and foremost. Naturally, it's a low volatility asset because it's pegged. We then have it's able to be a singular form of global digital money. At the moment, we have fragmented forms of digital money. Your Square app doesn't really talk to your Venmo wallet, but with a kind of stablecoin, you have a global standard for a form of digital money, and then naturally the transactions are secured and managed by a blockchain. So double-clicking a little bit deeper into the payment space. So if we take a quick look at what the existing cross-border payments landscape looks like today, these legacy payment systems will struggle, and the core 3 things are cost, time, and accessibility. So from a cost perspective, it's still pretty expensive to move money around the world. From a delays or settlement perspective, it can still take up to 5 to 7 days to actually get your money on the other side. And accessibility, not everyone can access cross-border payments and move money easily around the world. So what then can an upgraded crypto payment rail do for cross-border payments? It actually attacks it right at those 3 core problems. Speed, it obviously can move at the speed of the blockchain. So a couple of block confirmations and value can be transferred from one side of the world to the other. You then have also got significantly reduced cost. For all intents and purposes, you really only have the network fee or the gas fee as the cost to use the actual payment rail. And then finally, accessibility. This connects end users, payer and receiver directly through a series of digital wallets. So looking at the core benefits of crypto-powered payments, we've kind of isolated 5 of these that we kind of showed through this cross-border payments use case. One of them is speed. The second one is cost, which I've just touched on. But I think a significant one is the settlement times. So they no longer have chargebacks like you do with card payments. You also no longer have 7 to 14 day settlement windows. These can be instant real-time payments powered by a blockchain. Also access, most financial market participants can't access quick and easy, and cheap cross-border payments. Crypto-powered payments allows you to do this. And then I think a really interesting one for me is the advent of micropayments. So with blockchain-powered payments, you effectively increase the ability to do micropayments, which really unlocks a lot of untapped economic activity. So we've spoken a lot about kind of adoption of crypto payments, where we stand, how they work and what the benefits are. But really, are end users adopting it? Because naturally, you need the end user adoption of crypto payments to really make this relevant. And there's been a recent study from Payments where 57% of crypto users are actually looking to pay with crypto, and 59% of people interested in buying crypto would actually also be interested in using that as a payment method. So what does that mean? It means merchants are taking note. If end users are adopting crypto payments, merchants are starting to adopt crypto payments themselves and looking for crypto-powered payment solutions. We've seen kind of, it's largely starting to give some of the key merchants a competitive edge. And even some of the bigger payment companies are venturing into the crypto payment space. So effectively, what will it take for crypto-powered payments to go mainstream? And I think there's two core things that we've drilled in on. One being the increased stability and consumer trust. We're going to specifically around stablecoins and regulated stablecoins. And then the second piece of that is a unified global regulatory framework. Regulation at the moment is still fairly fragmented around the world. Different markets are doing different things. Regulation is moving at different speeds. And I think bringing those regulatory frameworks together in a sort of a unified regulatory framework will do a lot to push the kind of payments industry forward, specifically, ones using a new upgraded payment rail like blockchain. And then finally, I just wanted to kind of leave you with a few kind of trends that we're watching specifically in the crypto payment space, or almost slight predictions. We really believe that emerging markets will lead, the crypto payments adoption. We saw this specifically with some of the roots in Asia, where originally it started with individuals, and now we have businesses and payment PSPs and payment gateways using crypto as a settlement currency. We saw the same adoption happening in Africa right now, and LATAM is starting to get moving. It's no longer in LATAM just a retail speculative asset, but businesses are using it to actually move money around the world and use it to do payments. And then the second piece is broadly what I touched on earlier, but the significant amount of capital that can be unlocked in the pipes. If you understand the existing SWIFT network with Nostro and Vostro, pre-funded Nostro and Vostro accounts around the world, you get a significant amount of capital just effectively stuck in the pipes. And by incorporating crypto-powered payments or using a better payment rail powered by blockchain, you can unlock a lot of that that trapped capital and get things moving at a bigger speed and just better overall. So thank you very much for your time, and please come see us at stand K15 if you have any questions.
Awesome, awesome, awesome. Thank you so much for that great presentation. Just before you go, I'm interested to know, what is it like to operate within London? How have you found London City to be a place where you can build a business, since we're at London 2049?
Look, I think we originally, there was one or two of us in an office in London, about a year ago. Now we're out to about 45 at an office in Farringdon. So it's been a crazy ride. And I think the density of talent in London is unmatched, specifically in the fintech space. So it's a deep, talent pool that we can kind of pull from.
And we do have that framework already. And I think you've just pointed it out. Having that framework of fintech innovation, which you've seen for the last 10 years, is helpful. I'm not too sure if it's applicable from a regulatory standpoint, but at least it's helpful to see where we grow from.
100%. I think it gives us a playbook that we can kind of model the existing kind of fintech regulatory landscape, take some of those and apply them to crypto, whether it's transaction monitoring, KYB, due diligence, and that sort of thing. At least there is a framework, and we're not operating completely blind.
Well, that's brilliant. A big round of applause for Chris. Thank you so much for your time today. Thank you. Thank you.